All right. So joining me today is Mark Cuban. I'm so thrilled to have you here, the billionaire entrepreneur and investor who stars on Shark Tank and owns the Dallas Mavericks. Welcome, Mark. Great to have you here on the Defiant podcast.
Yeah, thanks for having me. I'm a big fan of Defiant.
Yay!
I'm a subscriber. Yeah, for sure.
Everyone, hear that? Mark Cuban, subscribe to the Defiant.
It's a really good newsletter. I appreciate it.
Awesome. That's so great to hear. Mark has made waves recently in DeFi. He's been tweeting about using Aave and buying and selling NFTs. So that's really cool to hear. And I'm really excited to talk about all that stuff with him. But first, let's go back in time a bit and just tell me about your crypto journey. Like what first got you interested in crypto and Bitcoin? And what was kind of your first reaction to this?
So I'll go back to the beginning. When Coinbase first came out, I like to play with technology. I'm a tech geek and have been for a long time. And so I tried it. Some people sent me some Bitcoin because it was dirt cheap back then and wanted me to see it. But the conversation back then was mostly about it becoming a currency. And, that's why they're called cryptocurrency, which is really a misnomer, right? Because very few of them, if any of them, are actually currencies. And so as somebody who had written software, and I did a lot with distributed databases, my very first company, we were a systems integrator. So I would write, multi-user applications, distributed applications. And then I sold my company to CompuServe, which had a worldwide network that Visa was on. And, I did a lot of business with Lotus Notes, which had replication servers. And so I really had an understanding, not as much as some people, but what I felt was a strong understanding on distributed databases and, decentralized databases. And so I was all in on blockchain. But like any other new programming language or platform or anything, there was a long ways to go before, blockchain was really going to be ubiquitous. But, even back in the beginning, I remember getting into arguments with people at South by Southwest back then. I was all in on blockchain, but the argument on Bitcoin in particular was always it was going to be a currency. And over the next 5 years, I was certainly a naysayer. And to this day, I'm not a believer that Bitcoin will become a currency. And most Bitcoiners aren't even saying it's a currency anymore. And when they had the split in 2017, that kind of confirmed, right? You're not going to do it. And, I've listened to all the talk about Lightning over the years and how that was going to change everything. And, it just hasn't. So, long story short, what really started to change was even after 2017 and the big price movements over the last year or so, you've seen people maybe 2 years only start to refer to Bitcoin as a store of value. Nobody's really talking up the whole currency thing any longer. At the Dallas Mavericks, we started taking Bitcoin for tickets and other purchases back in, I think, 2015. And I think ever since then, we've sold maybe $300 worth. People just don't want it. And I did it because I wanted to see if people would actually use it as a currency. And, back then, some people tried. You had people going across the country trying to live off of Bitcoin and all that, but now people are like, no, I'm not going to spend my Bitcoin as a currency. I want to see it appreciate. So what really changed was, one, watching people change their mind about it being a currency and start recognizing that it's only a store of value. And two, starting to see the maturation of blockchain apps, particularly on Ethereum. And then three, this past summer, watching DeFi go nuts. So for me, DeFi really was, okay, now blockchain in particular is really starting to mature. You're starting to see applications that are really coming into play. You're starting to see NFT, and it's not so much just about how much is sold and gross market value, but more just that people are becoming more comfortable with it. And so we're starting to see these applications that are just popping up left and right. And it reminded me so much of the early days of the internet, where the mid 90s, people started talking about internet applications, but the internet had been around for 10 years, right? But it was mostly in universities. And so it was very analogous to what's going on with blockchain. You had early adopter applications, you had banks and private organizations trying to use blockchain. You had people trying to come up with, new ways to use it. And then bam, smart contracts came along and it just blew up. And Bitcoin no longer was all about, well, it's going to be a currency, and then people would argue about the block size and all that shit, right? It was more now, okay, what can smart contracts do? And now that people have come up with these ideas and people are starting to put money into it, you're really starting to see it. So that's what's got me really excited lately. That was a lot longer answer than you expected, right?
No, I love it because it was a lot of, you touched on a lot of the topics that I wanted to bring up in this interview, because I think it's kind of hard to pin you down, because you present yourself sometimes as a Bitcoin and crypto skeptic and sometimes as a crypto bull. And I think now you've kind of explained why that happens.
Right. So here's where I'm a skeptic, right? Mm-hmm. First, whenever somebody would argue it was going to be a currency, that's where I was a skeptic, right? Mm-hmm. Because you put aside the transactional issues and speed of transaction and cost of transaction, right? That's one thing. And even the complexity side of it, that's another thing, right? People don't fully understand wallets, and even with the MetaMask and everything, it's still complicated for a lot of people, and dealing with keys and, seed words and all that kind of stuff, physical keys, it gets really complicated. Mm-hmm. But where you see me really start to get skeptical still when it comes to Bitcoin in particular is the whole thing where people like to talk about fiat, right? Well, mm-hmm. There's so much inflation in fiat and there's so much money printing that this is a hedge against fiat, which is the exact argument that gold bugs make, right? Mm-hmm. And I just disagree with that completely. I don't mm-hmm. think that there's any correlation between what happens with the Federal Reserve and what happens with the price of Bitcoin. And you hear me say it all the time, and it gets people mad. I said, well, it's just supply and demand. And they're like, well, of course it's just supply and demand, just like everything else. But the reality is, most fiat money is digital right now.
Yeah.
Period, end of story, right? Mm-hmm. And there will be a point, I believe, when sovereign governments have their own digital coins, because it's going to be cheaper. We lose money on every penny minted. We lose money on every nickel minted, right? There's just so much cost and stupidity associated with how we've always done those things. But it's not an inflationary issue, right? And that's where I really start. And if you look at gold, right, there's been scenarios where people thought, oh, gold will really appreciate now because, inflation is this or inflation. It just doesn't happen. If everything went to hell in a handbasket and we tried to use gold, people just hit you over your head and take your gold, right?
So let me take the position of kind of the hardcore Bitcoiners. And so their argument goes something like no fiat currency has been able to survive over a very long period of time. Governments debase their currencies. They become hugely in debt. They're not able to pay back their bonds, and the whole system collapses. And so the argument goes, when that's happened before, Bitcoin and distributed ledger tech and cryptocurrencies weren't around. This time they are. So when fiat and the US dollar collapses, there will be this other financial system that will be there waiting for kind of the world to convert to crypto.
That's the narrative, and I get that, right? But the reality is reserve currencies tend to stick around for as long as they're reserve currencies. And there's always multiple currencies that then become, if one falters, another one stays there, pops up, right? You have China doing their best to become a reserve currency. You have the United States doing its best to sustain itself as a reserve currency. I'm not a currency historian, but you've got the British pound that's been around for generations, for hundreds of years. Used to be a reserve currency, but hasn't collapsed yet. It's gone up and down, right, relative to the euro and relative to the dollar, but where you've seen currencies collapse, like Argentina and other places, right, or Venezuela or wherever, you've seen some Bitcoin being used because it's available and accessible, but at the end of the day, it's always pegged to the dollar. And no matter what, in order to spend it, you've got to convert it to whatever that reserve currency is going to be. So, you can hope that Bitcoin increases in value faster than the dollar or whatever inflates, but you don't know that for certain, right? And there's so many uncertainties there that you can create the story that's saying, well, what else would it be, right? But gold bugs would tell you it's going to be gold. Right. And someone else would tell you it could be platinum, whatever, because commodities should inflate at the same rate that inflation is, right? Because there's scarcity issues there as well. And you got to get them out of the ground, et cetera. So it's not that it definitely won't happen, right? But you can't really value that right now to say there is, without question, Bitcoin acts in as an alternative or as a hedge to fiat, because there's no evidence. That's a hope that it will, just like for gold bugs, it will. And in Argentina, back when all the currency, I was just talking to somebody about this, back when their currency collapsed, gold itself was useless, but people ended up using commodities and food and some even gold jewelry, right, became kind of a trading point because gold in and of itself. But there are people that will tell you gold is the fallback currency and has been for thousands of years. It's just a narrative.
Right. I like you implied the fallback currency, if the dollar collapses, may well be like the Chinese yuan or something. Like there might be another like fiat currency that becomes the reserve.
And I'm not saying that's going to happen. I think it will, because I think China inflates their currency more than anybody, right? But and controls it more than anybody. But yeah, I mean, there's always a currency there to take its place, and they subsidize it too. That's the difference with Bitcoin, right? Where fiat, where the United States has become fiat around the world, because you can spend $1 anywhere. They'll take it in Russia, they'll take it in China, they'll take it, anywhere. It's always had somebody promoting it. Right. So China gets the yuan out in places because of their Silk Road policy, where they're building things there. Right. And they're subsidizing, and they want the exchanges. You take our currency. And the United States lends money or borrows money in dollars. And so there's a lot of subsidies going on that Bitcoin doesn't have the benefit of because it's decentralized.
Okay. So that's kind of where you're a skeptic, because you don't see it as a currency, and you don't see it as kind of a fallback to fiat.
Right. You see it ever becoming a currency? You see it ever becoming a currency?
I'm not sure. I haven't really made up my mind. Like I see the argument. I do believe kind of the way that the different governments are running their currencies is untenable and unsustainable. But yeah, I'm not sure if like we'll actually see everything collapse and everyone going to.
Now let me tell you what I think we could see, right? So to me, sovereign governments holding gold is ridiculous, right? Yet here in the United States, we have Fort Knox holding all our gold like it means something, right? It means absolutely nothing other than the fact that as long as it's in Fort Knox and they don't sell it, the price of gold doesn't go down, right? Now imagine, and I could see this, that as countries get into digital coins, that and they think that Bitcoin has perceived value. It doesn't even have to have real value, just perceived store of value that enough people in this country believe in. I could see sovereign governments selling that gold, or at least half of it, and owning some percentage in Bitcoin, some percentage in Ethereum, and whatever they do with USDC or tethering something, right? I don't know specifically what would happen, but I could see that happening, because a lot of this is just trust. What do you trust? Who do you trust? How do you trust it? And, Bitcoiners, and rightfully so, trust, algorithmic scarcity. And that's okay, but there's a lot of underpinning trust that goes in there as well. You got to trust, electricity rates. You got to trust availability. You got to, trust that nobody can get to 51%. There's so many issues that you have to address. But if the government goes to digital in the way that it should, absolutely. And, maybe, the genesis of that is that Every kid that's born, just like you're required to get a social security number, you open up a digital bank account, the equivalent of a wallet, where people can, so like when we have a stimulus like now, you could do direct deposit digitally as opposed to having to send too many people a check, and so you get the extension there. Maybe based off of that, they go out there and sell some of that gold and buy some of that, and buy Bitcoin or other crypto assets.
Yeah, that'd be amazing to see. And I agree, it's like a more logical step, or more expected. So you do see at least, if not the currency aspect to it, the digital gold aspect to it, like the store of value aspect to it.
Absolutely, because I've always said for years and years and years, long before Bitcoin, that gold's a religion, and it's what people want to pay for it. And then goldsters will say, oh, there's intrinsic value. There's the manufacturing usage. Well, that's minimal, right? And then there's jewelry. Well, jewelry, why do we pick gold over silver? Because historically, people thought gold's more valuable than silver. There's no intrinsic value more to gold than there is to silver. We just value it that way. And, it's the same way. Narrative sell value, narrative sell store value. So, yeah, I believe in the store value story. And I believe now that you're seeing more companies dive in and use it as that store of value. That gives it authenticity. And so, yeah, I think it's going to continue to be, I still think there's questions whether there are other crypto assets that might also become significant stores of value. So we'll see what happens there.
Okay, and that leads me to my question about Ethereum and Ether. So earlier in the conversation, you said that seeing DeFi grow and all these different protocols also helped you kind of change your perception about crypto. So can you tell me more about that? Like, do you think Ether can become as a suitable store of value as Bitcoin is? And what in DeFi made you become kind of more bullish on crypto in general?
So the biggest limitation right now are transaction costs, right? They're ridiculous, right? To do anything. And because of that, it actually it puts a lid on the number of actual transactions. And you see people being pushed towards private blockchains like Top Shots and different NFTs, right? And different tokens and stuff like that. But at the same time, I think if ETH, and I don't remember all the new things that are the 1559 where they're going to burn, Ethereum, and 2.0, where hopefully the transactions will be faster and cheaper. But like some people say, 2.0 is right around the corner and always will be. So, I don't know what's going to happen there. But smart contracts are real. And smart contracts on blockchain remind me of the early days of the internet, when people realized that there is a network effect, and that with just HTML and then some basic JavaScript, you could do a whole lot of business and create a whole lot of new businesses. So there were companies that only sold books in bookstores, and then Amazon came around. There were only radio and television, and then AudioNet, putting audio and video as broadcast.com came along, and now streaming's ubiquitous. And so, but it took 25 years to get from there to here. And so we're right at that point right now where smart contracts in particular on top of blockchain allow people to take anything that's digital and turn it into a product and sell it. But what's really changed everything, I think, in terms of the smart contracts is the fact that it's becoming friction-free banking, where it's easier, even though you have to over collateralize, it's easier to borrow in seconds. Yeah. Even again, still, I guess it depends on where else you'd be borrowing, but still relatively high transaction costs. But still, if you've got $200 in Ether or Bitcoin and you want to wrap it, and then you want to borrow $100 at 2.3%, it takes you 15 seconds, right? And that's incredible. And that now starts to really begin to disrupt the banking industry. That's not to say they're going away tomorrow, but as more applications come along, and more importantly, more trust comes along, and the friction of opening up a wallet and understanding it is reduced. And again, I'll give you an example that goes back to the early days of the internet. When I started streaming with our company in late 94, early 95, right? In order to stream, and now everybody just, you cut the cord, you stream, it's no big deal. Back then, you had to have a powerful PC. You had to have a modem, right? Maybe you're corporate, but most people are looking to have a 56K modem, which don't even exist anymore, I don't think. Then you had to download TCP/IP software, which is what allows you to connect from your PC to the internet. Then you had to download an application that allows you to receive the audio or video packets and play that on your PC. That was a lot of work and that was a lot of hassle, but people wanted it so badly that, by the end of 1995, we had a million plus people downloading all this junk in order just to be able to listen to their favorite radio station or sports team. We would have 50,000 people listening to Chicago Cubs baseball games in the office at one time in 1995. So there were people willing to do that. You're seeing the same thing now. People are so upset and so left out of the banking system in a lot of respects that, if a regular person, before anybody knew who I was, when I was broke, right, living 6 guys in a 3-bedroom apartment and getting turned down for my credit cards. Once I got those first credit cards ripped up and my lights turned off a couple of times,
oh, wow.
There was nobody going to lend me anything, right? Even if I had $25,000 in the bank and I wanted to keep it there and I needed $5,000, it wasn't going to happen. Now all those people, regardless of how they got their money, maybe it's just a stimulus check. Right. And they need, and with their $600, they just bought $600 worth of Ether or ETH. And so now they want to borrow 100 just to pay a bill.
And they can do that.
They can do it for a lot less than borrowing off your credit card or elsewhere. Right. That really changes the game. And then you start, simplifying it, reducing friction versus traditional banking. And I can see, just like I saw in the early days of the internet, how all this is going to just go nuts. And it's going to have a significant impact and it's going to change the game. No doubt about it. And then on top of that, you've got the same opportunities with digital goods and NFT, right? And the variety of tokens involved there. I mean, for Gen Z and younger millennials, everything, you value digital more than you value physical stuff, right? Other than a house and maybe a car, a house appreciates hopefully, but that's the only thing that's more valuable than the digital assets that you own. Now you can start to sell those things. And just like, again, the early days of the internet, when you had Napster and you had the old school music companies trying to, stop everybody and sue everybody, this changes that game completely now with digital goods.
Yeah.
When I started playing with it and realized that there was a little thing that said, resale percentage, so that when I put up something for sale and it got resold, I got a percentage and it could track it every time it's sold forevermore. And I would continue to get paid for a zillion years. That was a game changer.
Yeah.
That changes how music, how video, how the internet is going to work forever. If you're a professional photographer, you should be putting your stuff, I like Mintable, I like Rarible, there's OpenSea, but OpenSea doesn't do series yet, and so I use Mintable and Rarible. But yeah, like on Mintable, just putting it in their store and it's no cost until you sell. If I'm a professional photographer and, I put all my pictures up there first, not on Twitter, and let people buy them there or send them from Twitter there. And that way you can, offer commercial license. And anytime it's sold again, you keep on getting paid. And same with music or a music video, instead of it being on YouTube, put it where you can, tokenize it and keep on getting paid. That's enormous. That is such a game changer that traditional industries that sell digital goods haven't even recognized that.
Okay. First, I just want to say it's crazy to hear you talk about kind of Mintable and Rarible and using NFTs and it's amazing because we live in this in very niche space and we read all of us following this day to day recognize it's super small and most of the time I tell anyone outside of this bubble about any of this and it's really hard to it's really hard. Yeah. So it's just great to see you talking about all this stuff.
Yeah, that's what I've done my whole career. My first company, I was after I got fired from a software job, I created one of the first systems integrators, and there's an old company called Novell, which did local area networks, and we were one of the first 3 in the country. We were one of the first. I mean, I can go down a whole long list. The first in streaming. I had the first all high definition TV network when everybody said, no, high definition is a joke. No one's going to spend that much money. With the point being that I always try to find little niches that I think can blow up. Okay. And it's not that Bitcoin or crypto is a little niche, because obviously there's a lot of people that have been in it and done big things with it for a long time. But now you're starting to see that ecosystem around it, all the extensions that have come from Ethereum and from Bitcoin. And we haven't seen them applied to real business yet. Mm-hmm. And that's not completely fair, but you know what I mean, right? People, it's not like every business is saying, how can I implement NFTs for the sale of my digital goods yet? And to me, that's just an enormous opportunity.
Yeah. Okay. So there's like a lot to unpack, because you talked about DeFi, and you also talked about NFTs and like digital collectibles. So going back to DeFi, I just love to hear more about what protocols have you been experimenting with, and like your thoughts on actually using this stuff.
Yeah, so I've played with staking with Aave because I wanted to see how it worked. I've done some yield farming, not as much as some other people, because it takes so much time to make sure it's done right, and you've got to track everything, and there's not a lot of utilities out there that just let you manage. And really the hard part of it isn't, jumping from, 6 to 19 to 58, and that's only there for 2 days, and all the ratios and everything. The hard part is knowing exactly what's trustworthy and what's not, right? Because if all of a sudden their pool just drops to nothing, or the MVL drops significantly, then, you can get bought in and you're toast. And so there's a lot of, and there's so many new ones popping up. And like the early days of the internet stocks, a lot of it is narrative. Someone releases a token and they go out and get some of their friends to buy some, saying, look, we're going to be first, and we're going to push up the token value. And then they get out and move on to the next one. And so unless you're there to be able to follow those narratives on a minute by minute basis, which I'm not, it's hard to jump around, right? So when I talk about yield farming, for me, it's more, okay, I went to Uniswap, or I went to Aave too, and I did some swapping, and I jumped around between yields, and just to experience it, or I staked so I can get my 2 Aaves every month. Nice. And so, or I get my Rari tokens when I post stuff there. And so I haven't, you don't need to live it. And by the way, I've got a friend that lives this every minute of every day, and is, making 10, 15% a day. But you really got to commit to it. Yeah. And so I've played with it. And so I understand it, and I look at the various tokens, and I bought one like Bizarro token just to see what happens. I put in $10,000, and I'm not going to say which one because it'll go to the moon and everybody dive in, and I don't want that responsibility. Mm-hmm. But I'm fortunate that I can afford to mess around with it and take some of the risks. And I bought some sushi just because I love the name sushi, but and I've gone on the different marketplaces to try to see the differences and experienced all the different FTX, you name it. I'm trying different things there, and I've got wallets all over the place trying to keep track of them all. And it's just more, I'm not here to tell you that I've become an expert in it, but I've really got an understanding of it by using it.
Nice. And what are some of your key takeaways after experimenting a bunch?
So the key takeaway is, once it becomes simple to understand wallets, like on Aave, it takes a little time not a long time, but a little time to understand their whole concept of deposit and withdrawal and staking, right? Mm-hmm. Because, you deposit it into there, then you withdraw it so you can stake, and it's just not, it doesn't make immediate sense. And so just trying to understand all the nomenclature there has to improve. Mm. And so, once the applications are there to simplify it, and Coinbase is trying to do some of that, but Coinbase is too big now, right? They've got to deal with so many clients that it's really hard for them to do it, and they'll get there eventually, but it's going to take time. And so the whole concept of wallets has got to be simplified. The whole concept of accounts within wallets has got, so when you're on MetaMask, my MetaMask because of the way I set it up when I was just learning, my MetaMask on my iPhone is different than my MetaMask on my Android phone, which is different than my MetaMask on my on the web, on my browser. And then in order to sync them, I got to delete this one, right? And then go out and do that one. And it didn't make sense to me when I tried to sync and I put in my password and it didn't work. So, right. And I understand why now it doesn't work, right? Because the account one doesn't match up to be the same as account one from browser to phone to mobile version. But all that stuff has got to get simplified. When it does, right? So just like, back when we started streaming, you had to visualize what could it be? Could this replace, regular television? Yeah, I thought it would happen a lot sooner than it would, but that it did. But I can see how banking is turned upside down by this, because every Bitcoin you own, every ETH you own becomes a bank, right? Or your wallet with that becomes a bank.
Right.
And you get to be your own personal banker depending on your account balance. And so if you're able to save enough, rather than putting it in a bank account or a savings account that earns next to nothing. And I think over time, right, as there's winners and losers, you're going to see the yields come down, because now there's all, it's because of the inefficiencies that you get to take advantage of some of these things, right? But even then, the friction to being your own personal banker by having your own bank account that you control in your wallet, and being able to use DeFi to give yourself a quick loan at a small percentage, right, while hoping your asset increases in value, that's a big deal. Now, there's still risk. Obviously, it could go down in value significantly. And so, how you hedge that, I think there'll be ways to hedge. If you put in $500, we'll never let it drop under 300. But here's the limit on what you can borrow and that type of stuff. You'll see variances in the collateralization, the over collateralization. But there's still a lot of, even with all that hassle, once you get your arms around it, it's less hassle than going to deal with the bank.
Yeah.
As more people realize that, then you start seeing that rush. And so that's why I got involved. That's why I think Ethereum is going up and up and up and up, because that's the easiest way to yield farm. Bitcoin is not an easy way to yield farm for most people, right? You've got to do your swaps and But Ethereum is easy. And, and that's become the currency for all your swaps or most swaps, right? And it's become the currency for a lot of, smart contracts. And so people are seeing that. And as more people are coming in, I think that's why, I've owned a lot of Ethereum since they started doing smart contracts for, over 3 years, whatever it's been. Maybe I don't know all the dates but anyways. But yeah, so, I think Ethereum right now has an advantage over Bitcoin in terms of regular people, not as a store of value and transactional, because as more people get into NFTs, all they're going to know is Ethereum. And they're all going to have to buy Ethereum in order to do it, right?
Wow. Okay. So you think Ether has an advantage over Bitcoin as a store of value?
Right now, for new people coming in, yes.
Wow.
Because Jen, here's my logic, and I know everybody's going to bitch at me, right? So if I decide I like digital art, how do I buy digital art?
With Ether.
Yeah. And if there's thousands of people a day, 2,000 people a day coming in, relative to the size of the number of people doing this, right? That's impactful, because every now and then one of them is going to be a whale and they're going to buy 1,000 Ether, right? And because they want to go out there and be able to buy that big artwork. And then on top of that, you're going to start to see music and entertainment videos and movies, for that matter, posted on OpenSea or Rarible or wherever, right? Because that's a better way to sell it. And what are they going to see? And what are they going to have to do if they want to do their own store? They're going to have to spend their $500 or $600 in Ethereum, right? You know, half an ETH just to be able to play the game. There's nothing in this ecosystem that says you have to buy Bitcoin first in order to transact or do something within DeFi or within any of the digital goods marketplace, right?
True. Yep. Yeah. So you think that means you think that NFTs and digital collectibles, digital goods will be the way to bring in like more people into crypto.
Yep. Yeah. Now, you know, what Dapper and Grow are doing with NBA Top Shots, you know, that's, you know, kind of a unique environment, and that's bringing people in, but that's getting them excited about digital goods. There are moments there, right? And so, you know, I buy all the moments for Dallas Mavericks. At least I'll have one for every player on the Dallas Mavericks that's available, right? Just so I can learn it. And, you know, so you go to Crypto Slam and you get to see the number of customers and you get to see the number of users, and you see that number creeping up. And those people are becoming more and more comfortable with buying and selling digital goods. And look, you know, NBA Top Shot's going through a whole lot of grief right now, just in terms of being able to keep up with the volume. And a lot of them are, right? Because blockchain doesn't scale great for some of these applications in terms of the user interface and the UX. But most people coming in right now fall into two categories: store value, I want to make some money, Bitcoin, right? So if you're investor first, Bitcoin. But everybody else, collectors, why would they buy Bitcoin?
Right. And about like collectibles.
Look, I'm still learning this, right? You got to tell me if I'm right, or if you think I'm right or wrong.
Oh, okay. No, I think you're right. I mean, just to be able to be involved in DeFi, NFTs, digital arts, digital collectibles of any kind, I'd say, you know, 99% or a large majority of all that activity is happening on Ethereum. I know that there are other blockchains trying to capture some of that market share with NFTs, like Flow, I think, is doing a lot on NFTs. But I mean,
Flow, yeah, I call it Grow. But yeah. Sorry.
So no, that's absolutely the case, and I think there's kind of a solid narrative. You talk about narrative around kind of Bitcoin as a store of value and digital gold, and I think that's not going anywhere. But because it has that kind of one simple as it by design architecture, that it just can't be that layer for decentralized finance.
No, I get that, right? I mean, when you pick the block size of 1 megabit or whatever it was, and there's, you know, and now, you know, that's the whole reason behind, what is it, Bitcoin Cash or Bitcoin SV, whatever it is, right? That's designed to do transactions. You know, it made its bed to be a store of value, and, you know, the algorithmic scarcity is a great selling tool. It's a great narrative, and that's not going away. And, you know, I can see the argument being made for people to put it in their treasury and to, you know, to use it as an alternative. And that's good. But, you know, for those, part of the problem is for those people who want to yield farm, trying to go through the process of going into wrapped Bitcoin, right, and making that swap. Yeah, you got to hope that they, you know, that the people behind Wrap Bitcoin are doing their job to make sure that it tracks exactly right. And there's some risk associated with that. Yeah. And it's just complex and hard to do. I mean, not hard to do.
There's no reason. I mean, there's no reason to go and wrap your Bitcoin if you can just directly do it with ETH.
Yes.
Yeah.
Period, end of story.
Yeah.
Period, end of story.
Yeah. Okay, so I wanted to ask you about digital collectibles, because sure. I saw this this blog post that you wrote, which I thought was great, and where you talk about how you collected stamps as a kid, and that helped you see kind of the value of NFTs now. So can you talk about that?
So yeah, I wrote the blog post on blogmaverick.com. And what I said was, when I collected stamps, I started out just because my mom got me involved with it. And it was cool, right? You learn history. Mm-hmm. And then all of a sudden I would go to stamp shows and I realized the inefficiencies of the market. Like literally, I could start at one end of a stamp show and buy a stamp for 50 cents because that stamp dealer valued it at this grading, right? And then walk down the hall and that a different dealer would value it at a higher grading and it was worth 100 times as much. But what I learned that's applicable is one, great, you have to deal with grading, right? Is it, what's the quality of the stamp? You have to deal with protecting it, right? Because if my little brother's got a hold of it, it's over, right? You have to deal with physically selling it and transporting it, right? And then you have to deal with buying and selling it, the actual, transaction. That's a whole lot of pain points that could go wrong, particularly the physical side. They tear, they this, they that, right? And then when NBA Top Shots came along, I initially was, that's ridiculous, right? Like everybody, it was just like, I'd rather have the card. And then I realized, wait, if this is all about being an investment, I like the idea that I have a Luka Doncic moment. I have that sense of ownership, just like if I have a Luka Doncic trading card, which, I've got a bunch of right here, It's cool that I can hold it, but I never hold it, except, when I do these Zooms, right? And so there's no value to being able to hold it or put it up on the wall. And so I have all the sense of ownership of a stamp or a trading card with none of the hassles. It's there. I can show it to somebody. And the people will say, well, there's that same video elsewhere on the net. Well, there's that same Luka Doncic picture everywhere on the internet too, right? So that's not an argument. And so, and I can put it up on a marketplace. I can see what it's worth. I don't have to worry about grading, and I can transact like that. And because you're using Flow, and Dapper, the volumes kind of create problems, but it's supposed to happen immediately. And and it's the same with any other digital good as well. And like I said earlier, with other digital goods, once it goes into the marketplace, I can keep on getting paid. That's the ultimate, oh my God moment ever. That's where you say, oh shit, this is going to be so much better selling. Like if I'm a musician, if I'm a photographer, I've got a company that distributes movies. We're figuring out a way at some point, the Dallas Mavericks with tickets, right? So that when that ticket gets sold again and again and again, I get paid 15, 20, 30% every single time. And 30% may be high, but we don't want people to resell it, right? We want people to buy it and use it. So it might even be higher than 30%. And so that ability is crazy important. And that's what people aren't seeing yet. And that's why I think, it's so much better buying and selling digitally than physically. You don't have any of the hassles. Maybe you can argue the transaction costs are still too high, and hopefully that gets worked through. Maybe everybody ends up moving to a private blockchain because of that, like Flow. But we'll find out. But that's like arguing over Microsoft browser versus Netscape browser back in the day.
Okay, so I think I would just like to have my opinion here on like the private versus public blockchain out there. So definitely, I think the future is in public blockchains because what we're seeing with Ethereum, kind of this explosion in innovation and composability, dApps working with other dApps, and just people being able to just go there and not ask permission to build or to use. That's only possible in public blockchains. And I think that's kind of like the killer use case for public versus private blockchains.
Agree 100%. Being able to look at the history of transactions across the board is amazing, right? The decentralization is great. But, some people argue that even, Ethereum is not fully decentralized because of the creators, right? But at the same time, let's assume that it is. I still think there's going to be applications for private where they open source it, right? And then open it up after they've built some usage. And so I could see happening where like Grow gets really, really big and, they start encouraging people to, then they open source all of it and decentralize all of it because they built the user interface that drives people to it.
Right. Maybe they can start as private, but then gradually decentralize and go public. That could
100%.
happen.
Yeah, and it'll be interesting. Like we saw what happened with GME and the stock market. Now, just imagine if Wall Street was built, Wall Street Bets, instead of being just a forum, was a blockchain-based forum where everybody put up, one Ethereum, right? And everybody would then, you took a half of it, you over collateralized, and half of that everybody contributed, and you look to see how many participants you had in Wall Street Bets blockchain, and then everybody voted on what stock to invest in.
Mm-hmm.
Everybody got a token to pick which one they invest in, and then after some period, and then everybody agreed how often they would review that investment. Is it by the minute? Is it by the hour? By the day? And then you can put a council together where people can assign their voting, because some people don't want to deal with it every minute of every day. Now, all of a sudden, that Wall Street Bets forum is now organized with blockchain-based governance, decentralized governance, where the users get to vote. Oof.
So you've just described the Wall Street Bets DAO, like a decentralized autonomous organization.
That's right. Yeah, that's exactly what it is. And so just think if that were the case. Now, all of a sudden, if all that power, just like you see with NBA Top Shots, you see the prices going up because the demand is there and people hodl them, right? Now, there's going to be good companies and good stocks and bad stocks. And even with a Wall Street Bets DAO, they're going to make mistakes and they're going to lose money. That's just the nature of it. And people that are going to get in, just like people who got in at Bitcoin at 17 and sold it at 6, right, or 3, there's going to be people who lose money. But when it comes to creating power for the small investor, a Wall Street Bets DAO could be crazy.
It'd be amazing. Okay, so
but
yeah. So I also wanted to ask you about Wall Street Bets. You've been a real vocal supporter of the group and movement, if you want to call it that. But why is that? Why is it that you kind of rallied around them?
Because I know Wall Street. I've made a ton of money from Wall Street. I've fought the SEC, and I know that, I'm not of the mind that all hedge funds are bad, right? They're all trying to screw everybody, but the advantage is given to the bigger investors. No one argues when Carl Icahn, who's a huge investor, and Bill Ackerman, who's a huge investor, Carl Icahn tries to create a short squeeze off of Bill Ackerman's shorts. No one complains when he does it, right? Back in the day when Volkswagen went nuts because of short squeeze and it was, funds that did it, nobody complains about that. When the SEC, lies and says they're trying to protect the little investor, but they use these things called administrative law judges and defeat the ability for a small investor who gets sued by them to have a jury of his peers or her peers in order to contest it. All these things are weighted against the small investor. So to see what happened with Wall Street Bets and realize that when you can bring a bunch of small investors together, even though, like I said in my Reddit, there's going to be pain, right? Not everybody's going to make money. Not everybody's going to understand it. People are going to make mistakes and it's going to be painful. The concept of it, of coming together, I think is amazing and I love it. Now, what I saw is what I just explained to you. Knowing what I know about blockchains and DAO, and again, I still have a lot to learn, there's no reason why that same concept can't move to a DAO, right? And have it work that way. And that's the concept really that I saw. And that's what I think will end up happening, because when it's informal like that with Wall Street Bets, you don't know who infiltrates it, right? And you don't know who's the loudest and who people will believe most. And people have to make those decisions just through their gut, right? Because you don't really know who each individual is. But that whole concept of density of small investors to create power is no different than, Merrill Lynch having 30 million small accounts and putting out a buy on a particular stock or a price target and trying to get all their investors to buy it, and the stock price goes up. It happens every day, all the time. And then there's also high frequency trading and algorithmic trading where they're not investing. They're just trying to take advantage, and actually, one of the downsides of the Wall Street Bets thing is that all these high frequency traders, Citadel, Virtue, et cetera, who I used to own shares in, they made a fortune because they front ran all of these things.
Yeah.
So I think there's an opportunity for smaller investors to put their buying might together Wall Street Bets was the first implementation or execution of it. But I think, again, now that I'm becoming more and more of a blockchain bigot and seeing what governance can do, I think Wall Street, WSB DAO has a lot, if and when that happens, it might be 5 years, 10 years, never. But wow. I mean, could you imagine? Then all the rules are out there. It's open source. It's decentralized. Everybody knows what they're getting into. And you kill all the advantages that big Wall Street firms have.
Yeah. And there's no Robinhood to stop you from trading if you're trading in DeFi.
I'll go Shark Tank. And by the way, I got to put my pitch in. Watch Shark Tank Friday nights on ABC. But, in Shark Tank, what we'll say to companies all the time is you can grow too fast. And imagine if you have too many sales and not enough money to pay for the inventory, or, you run into, you've spent too much on inventory and you don't have enough cash for other things. That's what happened to Robinhood. When they had so many buyers come in, then all that margin dollars, when you buy on margin, it's Robinhood that has to put up that cash to pay for the stocks. When they buy and sell options, that's Robinhood or the market maker they're working with that has to hedge all that. And that impacts the price of the market. And then there's the clearinghouse that has to deal with making sure all the stock is conveyed from buyer to seller. And they have requirements for cash as well. And so when all those things happen so fast, Robinhood didn't have enough cash. And Robinhood's biggest mistake beyond not having enough cash is that they weren't transparent about it.
Right.
They basically, it's a governance issue, trying to make it sound like they can't make a mistake. They should have just owned it. Guys, we just grew too fast. I'm so sorry, and we should have shut you down sooner. Now people would still hate them, but at least they'd hate them and say they're honest, or at least more transparent. Maybe honest isn't the right word, but Robinhood will never know what this could have been because Robinhood crushed the natural source of buyers on the day that it needed it most.
Yeah, no, it was crazy to see. So, okay, we're running out of time, but I really wanted to ask you about your kind of crypto portfolio. Sure. First, what percentage of your assets are you holding in cryptocurrencies? And if you can say how that's split, like I said, mostly Bitcoin or ETH or?
It's, a small percentage, maybe I don't know, because I don't even know what my full net worth is. I don't like mark to market every day. But it's a decent amount, right? If you look at all I'll tell you is across Bitcoin, Ethereum, Aave, not so much Sushi. And like I said, I got a couple smaller tokens I don't want to mention that I just have small positions in, and Litecoin. Other than Litecoin, you'd see me in the whale listings for all of them. Yeah. With my
between Bitcoin and ETH, is it split halfway, or do you own more of one or the other?
I own more ETH in terms of just number of ETH. I own more in dollar in Bitcoin, but that's changing as I'll wait for a little pullback on Ethereum since it's had a run up. But I just bought some Aave yesterday. Nice. And so right before it's run up. So I've been buying Aave for a while. But I'd say if I'm going to buy new stuff, that's probably a better way to answer it. I'd buy Ethereum on a pullback before I'd buy Bitcoin. And so when Bitcoin pulled back to 30,000, I didn't buy more. When Ethereum pulled back to 1,000, I did buy more. And if it did that again, I would buy more because for the very reasons we discussed.
Okay, and then a couple more questions I had is, do you think the digital goods marketplace, by market cap, do you see it surpassing the physical goods, physical collectibles by market cap in our lifetimes? Do you see that kind of switch?
100%. Just like we saw records go away and we saw CDs go away and DVDs go away. So collectibles will pass. Now you'll see those companies, Panini and everything. They're smart. They're smart people there, right? They'll get into digital. If anything, companies have learned you've got to give people what they want, how they want, where they want, when they want it, right? At the price they'll buy it at. And so they'll get into digital as well.
Okay. And then last question, if this was Shark Tank and you had to bet on the next fintech unicorn or the next DeFi unicorn, which would you put your money behind?
I wouldn't yet. I think like the early days of the internet, 99% of the companies aren't going to make it in DeFi. Maybe, a smaller percentage in digital goods, because I think there's a marketplace, early mover marketplace advantage. But part of the challenges of DeFi is making sure you have enough money available to you, right, in order to scale. And so there's going to be a lot of companies that try to put out a story for their tokens and try to build a good financial base and won't make it. And so I still think it's early. And then there'll be breakthroughs in terms of UI and UX where it gets a lot easier and a lot less friction. And we haven't quite seen those. And there's no assurances that the incumbents that are there right now are going to be the ones to do that.
Okay, so for you, it's still a little bit too early to invest in a DeFi startup.
No, I'll still. It's not that I won't invest in DeFi, right? Because like the early days of the internet, you invested in the pick and shovels more than you try to pick the winners, right? So there's going to be people who come up with tools, and there will be some winners like Amazon, and there's eBay were early players and they managed, but there were 99% of those early internet companies didn't make it.
True. Okay. And then like, if you had, you've made this analogy between crypto and the internet or like DeFi and the internet. If you had to say like in what year we are in terms of the internet, like, are we like 1970s, 1990s?
I would say we're in 1997 or 98.
Okay. Right? So like right before the big bubble?
No, right during the big bubble.
Okay.
So like you're seeing these market caps, right? And those are the equivalent of market caps of stocks. And so you're seeing some that, you've got your, Bitcoin, set that aside. You got Ethereum now that's what, 17, 18 billion, 124, 125 billion, right? It's like 1/4 or 1/5 of Bitcoin. And we'll see what happens with these new things. So if Ethereum starts burning and that number of outstanding Ethereum goes down, that'll change. But I still think it's 97, 98. Like my company went public in 1998, and then the internet bubble crashed in 2000, and 2001. So we're still let's just say early, but a third of the way through.
Okay, interesting. So we still have some way to go.
There's a long way to go because the user interface stuff. Again, like the early days of the internet, the user interface stuff was a pain in the ass. And the user interface stuff right now is horrible. It's horrible. And that's why, you look at, NBA Top Shots, they're starting to do it right. Rarible, OpenSea, Nifty, Super Rare. There are a bunch of them that are, starting to get it right. You start, Mintable doesn't have quite the user interface, but they figured out they need to improve their user interface, but they're free. So till sale. So yeah, a lot of this is going to change, and that's where the opportunity is. And that also means that people coming in are going to create some cool apps that we have not seen yet. And I'll close by one thing. In the early days of the pandemic, I would always say that when we look back at the pandemic of 2020, there's going to be a bunch of companies that we look back that say change the game. That's DeFi. America 2.0 is going to be built on blockchain, and a big part of that's going to be DeFi. And the fact that everybody was home, got stimulus checks, and was able to spend all this time to learn it and deal with it, that changed the game. And America in this pandemic was changed because of DeFi.
Amazing. That's a great way to end. Thank you so much, Mark. This has been awesome. I really appreciate it.
We have to do it again. And keep up the great work with Defiant, and keep on sending me the scoop because I love it.